I'm going to go through another exercise for the internal control and cash, and this time we're going to do a bank reconciliation for Western Limited and the related adjusting entries. So let's take a look at the question here. So first of all, they have given you a bank reconciliation on June 30th on the top here. And basically they're saying to you that the adjusted cash balance per bank agreed with the cash balance per book at June 30th. The July bank statement showed the following. So basically this is the balance both from the bank and the book perspective, because they indicated to you that they are the same at that time. So this is the amount of transactions that went through the bank in the month of July. And then they have given you the cash payments that has basically gone out from a book perspective, and the cash receipts they have actually recorded in the book regarding to the month of July. The additional information they give it to you is basically saying that the EFT collections were not previously recorded. The EFT payment are recorded when they occur. So the EFT payment are for the salaries, and they will be recording in the book as they are incurred, but the EFT collections are usually not recorded. The bank did not make any errors, and there actually one error made by the company, and they are saying that if there's a correction of error regarding to the checks, they should go to accounts payable. If it's to do with the receipts, they should go to accounts receivable. So the first question they ask you is to do the unadjusted cash balance per books at July 31st prior to the reconciliation. That's the first question. And they ask you to do a bank reconciliation and also prepare the adjusting entries. Okay, so again, here is the information that we have just looked at earlier. So at the end of the period in June, they have 12,743 as their opening balance for the cash in the book. So the first question they ask you is, they want you to come up with the unadjusted cash balance per book on July 31st. So to do that, we know that the balance on June 30th, it's the amount of 12,743, which is what they have given it to in the reconciliation on the top here. And also they have now given you that the total cash payments that they have recorded in the book is 15,148. And the total deposit they have recorded in the book is actually 8,955. That's what they have recorded. So if we take the opening balance, if we add the cash receipts that they have recorded, which is 8,955, and if we subtracted any cash disbursements, which they have is 15,148. So my total unadjusted balance should be 6,550 at the end of July. Okay, so now they wanted you to work on a bank reconciliation. Again, we should prepare the two sides. We have the cash balance from the bank and also from the book. So we have Western Limited, and it's to do with the bank reconciliation, and it's to do with July 31st, 2013. So from here we have the cash balance per bank statement. And over here we should have the okay. I'm actually going to put this in below here. All right, so the cash balance per the bank statement is what we have seen up in the top here. The bank statement's balance, opening balance, is 10,395. And the cash balance for the book, as we have calculated it before any adjustments, it's 6,550. So let's take a quick look at reconciling the checks that have cleared through the bank and also the cash deposit that have actually cleared through the bank. So let's take a look at the deposit first. Okay, so if we can look at the credit side of the deposit, they have 2530 that had gone through the bank. Last period, we do have that as an outstanding deposits. So the deposit in transit last period, 2530, it has now gone through the bank now. We have gone through 1212, so let's take a look at the company record. They also have 1212 here. They have gone through 3145. And we also have, we actually don't have 3145 as the, the 3145 as we discussed is actually a EFT collection, so that actually won't be showing up in your in the reconciliation of the records you have, and that's a reconciling item that we have to account for in our bank reconciliation. The next deposit is 2945, so that we have to take a look at 2945 here. Now in this case, they actually recorded as 25.9. They deposit 29.45, but in fact they actually recorded 29.54 in the book. So we know that there's an error here. So the bank basically 29.45. So there's a $9 difference. And then we have 25.67. And we have 25.67 here. And we also have 10.25. And we also have 10.25 here. So there are three items that needs to be dealt with. The first one is the deposit in transit of July 31st for $11.97. And the second one is the bank error, which is the $9 here. And the third item is basically the electronic deposit of $31.45 up here. So let's take a look at the checks that are cleared through the bank and compare it to our records here. So in the last period, we have checks 5451, 5471, and also 5474. And let's see if they have actually gone through the bank. So we have 5451 and 5471 for $22.60 and $8.45. So the first two has actually gone through the bank. And then they also have the 5475. Which is what we have got here, 1641. And then we have 1427 and 1300. 1427 is an electronic payment of salaries, which they have recorded as well. So 1427 they have recorded here as well in the book, which has gone through the bank now. And then we also have the 1641 is check number 5475, which is what we have crossed off, and 5476 of $1,300. And then we have 5477, 2130. $5,478, which is not clear through the bank yet. 5479, we have 3080. And then we also got another EFT salary of 1427. Which is down here. Now in this case we have an NSF check, which we know that from the previous example that we actually have to account for as part of a reconciliation, and there's also a fee associated with this NSF check. Then we have two more checks that we've cleared through, 5480 for $600 and 5482 for $1140. So those two checks have also gone through. And then we have check number 5481 for $475. So this has also gone through. Now this is again a service charge that was charged by the bank. Again, we know that that's probably a reconciling item as well that we have to account for as part of our reconciliations. So if we take a look at the outstanding checks that we have actually got 5478 here. We actually have 5483 here, and we also have one from last year as 5474 that we needed to account for. So if we go back to the bank reconciliation, let's just work with those items that we have accounted for right now. So on the bank side, we have to add back the deposit in transit. Which we know is there's one deposit that we have not yet accounted for. Which is $1197. And if we take the outstanding checks, and the check that we have identified is 5474. And the amount is $1050. And we also have check number 5478, which is $538. And we also have check number 5483, which is $1390, which is what we have discussed earlier. So let's take a look at the other stuff that we have identified here. So we talk about the EFT collection from the bank for 34 and 45. So that needs to be adjusted to the book record. So we add back the EFT collection, which is 3145, and we need to subtract. We know we have recognized an NSF check here. So we have accounted for this. We need to account for these two NSF checks. And it's the combination of 987 plus 40 because you're going to recover that from the customer as well. Okay, and we also have a bank charge that we have to account for here for the $45. And the last thing, as we have identified earlier, we do have an error that we have to correct it because we have deposited $29.45, but in fact we recorded as $29.54. So there's a $9 reduction in cash. I've got the account for here too. So that should be all our reconciling items. So let's see if we can balance the bank reconciliation here. So the adjusted so we have a total of $86.14. So this is the amount that we should be recording in our book as well. Let's see if we can get the same thing on this side here. So the total is $96.95 in terms of the cash you should have on hand and less all these adjustments here. So again, the adjusted cash balance per book should be equals to $96.95 minus the 45 and minus the $9 here. We should have $86.14 as well. So we reconcile the bank reconciliation. Now the next step is we would have to do all the adjusting entries relative to the adjustments we made in the book side. So again, the electronic cash payment, we would basically debit the cash for the amount of $31.45, and then we would have to credit the accounts receivable for $31.45 because that has been now collected from the bank. And then we have to adjust for the NSF check, so we would have to put it back into the receivables for $10.27, and we would have to credit cash for $10.27. And the bank charge is an expense for $45. So we credit cash for $45 because it has been taken out from the bank. And the last item is you have collected $9 short from the customers. You need to collect that back from the customer, as they talked about earlier too. They said any error, you would have to take it to the receivables. That's actually the question that we talked about earlier. And this concludes this question here, and thank you.